Good morning, everyone. This is Nadex Morning Analysis. My name is Todd Rich. I am with Nadex. With me today is Brian Caprice from Keep Trading Simple. And if I sound a little tired today, we had our day-long New Year, New You, Better Trader education event yesterday, and a lot of work to do. After that event, if you missed it, please, the recordings will be up on our YouTube channel, and you'll be able to catch them. Please feel free to catch those at your convenience as soon as I can get them rendered and approved through compliance. Speaking of compliance, before Brian and I talk about what's going on in the markets today, I do need to share that trading may not be appropriate for everyone, and that any trading decisions you make are solely your responsibility and at your own risk. Lastly, this is an educational session. Please do not construe anything Brian or I say as a trade recommendation. We are doing this for your educational purposes. So I think where we're going to start today, it's a big day. It's Inauguration Day. It's here. I know we talked about Brexit for a very long time, and there was a lot of anticipation, up to the very final moment. Here we are, and we're seeing some impact in the U.S. equities. Brian, you want to just kind of tee us up for Inauguration Day?
Yeah. So I mean, like you said, it's very, very similar to what we would see with Brexit. With Brexit, everybody knew it was happening. We had the details of it happening. And then when it finally went in, it was like a sign of relief, just because it removes a level of uncertainty from market. Obviously, the vote has been, everybody known that, has known that today is coming. But again, once it's officially here, it removes even just the slightest chance of uncertainty from the markets. And again, that's what it really is. It's a removal of uncertainty. It's just like anything in life. And again, what are the markets doing? You're seeing, the VIX go down. You're seeing movement in some of the Forex pairs. You're seeing a little bit of dollar movement. You're seeing a little bit of gold movement. But for the most part, you're seeing the indices go higher. I mean, you see the, NQ ripped higher today. So again, interesting data. I mean, and all this positive, this is at the same times where, you look in the top news and, we have the Dutch government, banning 2 different countries' flights, and putting curfews back at least until February 10th because of the coronavirus. So, it's very interesting times that we're in, with a pandemic going on. But again, this is another kind of global type style event here. Brexit was one of them. Obviously, a new president for a country as big as the United States is another one. And again, Jinjin's happy about it as well. So, all this starts today around 11 o'clock. I guess the ceremony starts at like 10, but then at 11 o'clock is when I believe Harris gets sworn in. Then at like 12 o'clock, I guess, is when Biden comes in. So there obviously will be type of speech or something like that later today. I know we may even, I don't know how fast it is before he can start signing the executive orders, but there's also a lot of talk that, how many executive orders are going to be signed in his first 10 days. And he already has a box of stuff ready to go. One of the big things is the pipeline is a very hot debate right now. And again, Canada yesterday had a lot of information, and he was like, listen, don't cancel it. We need it. We've invested millions of dollars into this thing. Biden just wants to kind of cancel it out. Canada's like, no, at least sit down and talk to us. It's on our soil. At least to have a conversation with us. So, it's kind of one of those things. It's already the first controversial topic that we're going to get with the new administration. So, if it's fast and furious today, we'll see. There'll be some crazy movements later on after it's done. If not, I would expect tomorrow that we start hearing about executive orders signed. And again, there's definitely going to be implications in the market as far as that goes. So, it's kind of it's the day. We're here. The fuse is lit. It's blowing today. So, we'll see.
Yeah. All right. Well, let's look at a couple of hot spots. I think we might do this in a slightly different order. You mentioned Canada.
Yeah.
I know that they had some economic news today, and it definitely had an impact on the gold markets. You want to kind of just talk a little bit about that? We can probably take a look at gold.
Sure, and that's in the middle. You guys are, I guess I can kind of highlight these real quick just so you can kind of see what I'm talking about. But right here in the middle of the screen, you guys can see a bunch of red numbers. Let me see if I can make it just a little bit bigger for you guys to see. There you go. You can kind of see in the middle here. So these CPI data, if you guys know other weeks, CPI is basically the initial gauge of inflation that we look at, the consumer price index. The interesting thing about this reading today, although it comes in as yellow, all the gold hawks out there are waiting for inflation to creep in. Now, inflation around 2% is what's considered healthy. It's what a lot of the mandates are looking for. Different countries have different mandates as far as employment The United States has kind of the toughest one, but many countries are looking for a 2% rate inflation. As you can see over here, the common CPI, medium, and trimmed, and again, you don't have to be an economist and the trims that you don't have to dive into it that far, but just know the expectations are a little bit higher, and these are all pretty disappointing. So in 1 year, while there was some inflation, it was less than what was expected. So that's not necessarily a good sign for one of the commodity-based nations. Commodity-based, I mean basically Canada and Australia. Those are the two that we look for inflation there, because again, they are kind of the economies that are driven with oil and gold. So again, not necessarily what you want to see as far as if you're a big gold person going forward, because again, like I said, with stimulus, gold is one of those things that could be on the rise. And looking at a gold chart, you can see that gold was since yesterday afternoon it had been rallying a bit higher. And again, I do expect gold to go higher. Yellen was saying, "Hey, let's just throw money everywhere. We're gonna have checks. We have Yellen. We're gonna buy. We're gonna go big, so this doesn't hurt." Like, one of the things that I think, again, a lot of people are, and we've mentioned here in the past about the stock market and the economy are actually two different entities. Okay. Unfortunately, they get wrapped into the same discussion a lot of times. And, you see a recession and again, you got the stock market at all-time highs. There's a very, very big disconnect about what's actually going on. And I actually had this conversation with my mother yesterday. She's like, "Well, isn't this good? I mean, people are hurting." It's like, yeah, but a stimulus check is to make people whole for what's already happened. Talking about additional measures is not focusing on the hurting. It's trying to prevent hurting in the future. And I told her eventually you have to pay the piper. So things like gold, it's like a perfect environment for this to go higher. But until we see inflation, it's very hard for a gold hawk to step in here and say, "Hey, let's go." Because again, the pandemic's not past. The cause of the current recession been doing, because the economy's been running crazy hot. It's what does growth look like going forward? All right.
Right.
Now, again, this is a 30-minute chart. We've seen this one. I'll go back to an hourly. We've got this 1860 now since January 8th, basically since 2021 started. We've talked about the bottom level down here at about 1830. We've been waiting for a breakout of this 1863 level, and every time it just keeps getting knocked down, knocked down, knocked down. So we haven't had the trigger to actually go long. Now this morning, and again, I was zoomed in a little bit lower. The same kind of breakout that we're looking for of the 1863 level is the exact same trade setup that we would have had this morning. We had a level of basing here. Let me bring my yellow cursor across. I'll make it. I killed it. Let me get another one real quick. There it is. It's back. So you guys can see we had a level of basing here, and this level of basing with the break is exactly what we're looking for right here. We had a level of basing. We had strong momentum off of it. We came up and based through it, and then we used it as a bottom. And again, it was a bottom here, bottom here, bottom here. And this morning, in this very big spike down from the European session,
another one,
it was the bottom right here as well. And that's the same thing that we're looking for. If I move I'll also draw another one. We are looking for a break of this level right there. You guys can see this pink level. And the same thing, a basing in, a push up, and a break higher. And again, everything that Yellen is saying, everything that Powell is saying, everything that Biden thus far has said, all these things are going to lead to inflation. It's definitely going to come in here. Absolutely, without a doubt. It's nothing, again, this is not going to get supplied. It will come in. You just can't print money without inflation. Again, inflation is healthy, so it's not like it's a bad thing. Right. But again, is it going to break through? When Biden starts signing executive orders, which he said he's going to sign a lot, this absolutely could start breaking higher. So we got certainty back in the market. They said no dollar weakness. Now, obviously, dollar weakness is going to come back into it. Again, is it a trade for today? I don't really know. But, again, set some alerts in that 1860 area. Look for a break above a pullback. And again, it's coming. It's just whether or not we get it today or again, I would say it's not a long term. It's probably this week or next week that we're going to break and then push higher.
All right, I'm going to jump over to the Nadex platform and just take a quick peek at that, because we noticed it this morning. I pulled up the gold chart, and I didn't even have to do anything to change anything on our gold chart. We still have those levels, that 1860 above and that 1830 below. So if you're having a hard time seeing, it's that 1830 below, 1860 above. I'm going to even try to show you. I mean, it's moving through and bouncing around multiple binary option levels, and And you could see yesterday it didn't quite get to that 1860 level. It got very, very close. European session opens. The Canadian news comes out. I mean, this thing just a very strong emotional move down, got very close to this 1830 level. I think at 1831 and change, immediately bounced off of it, and we're coming right back. I mean, there was an opportunity if you were keeping an eye on the gold markets and you had these levels. There was a couple of trades this morning that it's fitting right into this range. And again, binary options, great way to play this. And what Brian, I think you're looking for is, I mean, we're waiting to see it break above this 1860 level. I think what you would like to see is, have it actually get there, go through it.
Yeah, I'd like to see, actually, first I would like to see basing in there and I chew up the rest of those sell orders in there. Again, we've seen it spike up and it's gotten very, very close and it touched it and pulls right back again, which says, hey, listen, there's still sellers here. If there wasn't, price would have went higher. I'm actually looking for the restabilization where it pulls back up, starts the base in that level, and then I'm looking for retouches of it coming back down again.
Right.
So that's the typical pattern.
Base in here, base in here, base in here, base in here. When it does pull through, it'll often come back. I know you call it that Harry Potter trade. Is that?
Yeah, because of the lightning bolt. Yeah, the
lightning bolt. It looks like a lightning bolt. I'm going to start
Yep.
using your language.
That's why. Yeah.
It bases. It comes up. It comes back down, touches it, and then boom, takes off. So gold, something to look at.
One thing I want to add with this as well, because again, there's that discussion about, do I do binaries and call spreads or even knockouts? Depending on where we can end this week. Like I said, I mean, today's Wednesday. There's 2 days where a lot of stuff can be signed in. Though obviously, once the full people, everybody's moving in, this could be a very interesting trade to look at next week and jump over into the knockouts because of the longer duration of the knockout brackets. Again, as price moves around, it's more in touch. It's closer in most cases. But when the market opens, tends to be when those knockouts are as close to price as they can be, and we'll have the most options. Sunday night could be an interesting night. If we've pushed through and we've pulled back a little bit on Sunday, there could be a very interesting weekly binary trade. I know normally we talk about very short duration trades, but there could be something that we hold next week looking for spikes much, much higher on this one. Again, because like I said, supposedly the first 10 days are going to be fast and furious with executive orders. Anything with, I'll tell you right now, there's this whole thing about paying all the student loan debt off and just writing a check for it and be like, yep, it's done. That's a lot of money that has to go out. Again, that's going to lead these gold hawks to be like, in a frenzy, and that could be the catalyst. I don't know, but that's one of the big things that's been mentioned. So,
all right,
in the first 10 days.
So gold, definitely something to be looking at, and got some interesting levels to keep your eye on. I would like, before we call it a day here, I think it'd be kind of fun to go back and take a look at what happened with the euro US dollar. We had some levels yesterday, and it was, I think it might be good to revisit that real briefly. Here, I'm gonna.
Yeah, sure. Yeah, so let me reset my time on this one. So, kind of the same scenario. We talked about this one pulling up. We mentioned up in this 121.65, and remember, my numbers are based on ECN data, so yours may be slightly off. But we had mentioned that we had an area of basing, and let me draw a little. Let me get my little makeshift cursor. This area here, it dropped and we had a lot of basing. On a 4-hour basis, we saw that again, we had a level in there. Oh, there's my cursor. So you can see that we had this basing and then a strong push off of it. Well, this morning, I'll move the price tag out of the way so we can see it a little bit better. We came up and basically tagged that 4-hour zone. And again, 4-hour zones are some of my favorite ones in currencies. And since that time, since the European Open touching that 4-hour zone, we've dropped about 50 pips back to the downside. So, on an hourly basis, you can see, I'll overlay it. I don't know if you guys can see it here, but right here, the 121.50 range is where we really kind of deviated from the basing and drop. And I'll overshadow it here so you can see it a little bit better. Right there is where the 4-hour zone was showing. So, as far as the timing goes, this is something that we've mentioned. I mean, not everybody wants to wake up at, 3 o'clock in the morning, but if you're West Coast or things like this or midnight, a lot of people just say, how do I get, I just need one good trade a day. I mean, if you're looking for one good trade a day, I mean, it doesn't get much better than this. European Open, right into a 4-hour level, retracing from the prior day. It really doesn't get much better than that. So, I mean, again, I think 121.54 needs to be an area that you focus on. Again, it's been turned away with very sharp momentum. We're bouncing off of a little bit of a level right now. A little bit lower, the 120.65 level is also on a 4-hour basis. That's kind of the last time that we've seen really any true buyers step in on the larger time frame in the opposite direction. So, With a
Here,
drop of 40 more, we flip.
I'm going to go ahead and flip it over real quickly because, and these are some levels that we'd had in the past. Roughly that 121.60 ish level,
Mhm.
and it did. It got, again. It didn't actually hit there. It got very, very close. The European Open happens. We had this move down. If you're looking at the Euro US dollar, we're kind of in a no man's land at the moment.
Yeah, we're between two levels right now.
Right, we're between two levels, but it's keep an eye on that 120.60-ish level up above where sellers have stepped in. And if this were to continue to drift lower, I think you said around the 120.55-ish level.
Yeah, 65 to 55. Again, that's a 4-hour chart. So again, 10 pips on a 4 hour is not really,
right. And and I'm on a 15-minute chart, so we're right.
Yeah.
We're right. I mean, interestingly enough, there's a little bit of a range here in the Euro US dollar. We're in the middle of it now, and if it were to hit one of these other levels, it could be an interesting potential trade if it's something that you wanted to do. All right, with that. Is there anything else, Brian, quickly that you wanted to share for Inauguration Day, or anything that we hadn't covered yet?
No, not really. I mean, overall, dollar's flat. Oil's moving today. Oil currently is up. Looks like Brent's up 1.25%. Again, that one's on the move. Gold and silver up slightly. Volatility down. Like I said, that certainty. I mean, crude oil is up 1.25% already for the day today. So, and again, that could be the pipeline story. Less oil pumping. That means lower supply means increased demand, increased pricing. So, like I said, there's a lot of executive orders that are very, very big, kind of global implication things. But we'll see when he starts signing. So we'll know more tomorrow.
All right. Well, listen, everyone. Thank you for joining us this morning. If you have any questions for Nadex, email us, customer service at nadex.com. Any questions for Brian, you can email him, support@keeptradingsimple.com. I also like to mention our Trustpilot review site. We'd greatly appreciate it if you gave us a review. Trustpilot.com/review/nadex.com. With that, I want to let everyone get ready for the U.S. Equity Open in 12, 13 minutes. I want to wish everyone good luck in the markets, and we'll catch you tomorrow morning.